One of the major issues with dividend-paying stocks is that they pay out quarterly or yearly. This may be a big issue with retirement. Yet there are some monthly paying dividend ETFs. In this video, we will be covering the 5 top monthly paying ETFs. Welcome to the Fifth Beast Production channel. I am not a financial advisor and please do your own due diligence when investing. The first on the list is Dow Jones Industrial Average ETF, ticker symbol DIA. If an investor is looking for a fund that is more heavily weighted in industrial companies, the DIA is a good choice. DIA ETF pays an annual dividend of $5.97 per share, or an average of $0.60 per share, with a dividend yield of 2.15%. The DIA has managed to post a 7.5% annual return. The $11 billion and heavily traded dividend ETF tracks the 30 mega-cap stocks within the Dow. These include household names like Visa and Caterpillar. Another often ignored benefit of the DIA is that it is a growing stock that also pays a monthly payout, along with the fact that it holds relatively stable and large companies. This makes it perfect for conservative investors looking for income. The second Global X Super Dividend ETF, ticker symbol SDIV. The $966 million ETF is a mixture of various global high-yielding stocks, trusts and other securities. However, in that diverse mixture, investors are treated to one of the highest-yielding monthly dividend ETFs around. Currently with a dividend yield of around 6.26%. SDIV tracks the 100 highest-yielding equity securities from across the world and then equally weights them to create its portfolio. In terms of total performance, SDIV has been solid. Since the monthly dividend ETF's inception in 2011, SDIV has managed to return 25%. The third monthly paying ETF is WisdomTree Small Capital Dividend, ticker symbol DES. According to WisdomTree, DES screens for those companies with not only the highest yields, but those that are also the most secure and strong, making it a safer bet. DES isn't the highest yielding ETF on the planet, with a current dividend yield of 2.87%. However, over the longer term, small caps have historically outperformed large cap stocks by a wide margin. That margin grows even larger when you include small caps that pay hefty dividends. The fourth monthly paying ETF is UBS Etrix Monthly Pay Mortgage REIT, ticker symbol MORL. Sometimes a 3, 4 or even 7% dividend yield isn't even enough. Therefore, for some investors MORL could be the right ETF with a 20% dividend yield. MORL may add leverage to an already high-yielding sector where these firms don't actually own physical buildings, but make or buy loans tied to commercial or residential property. Often, they would borrow money themselves to help finance their own activities. However, that 20% dividend yield is not a risk-free ETF and most investors probably don't want to bet everything on this particular ETF. The fifth and final monthly paying ETF is iShares Morningstar Multi-Asset Income, ticker symbol IYLD. As interest rates have hovered near zero for what seems like an eternity, investors have plunged headfirst into a variety of high dividend-paying assets classes. IYLD shifts its portfolio of underlying iShares ETFs around to create an asset allocation of roughly 60% bonds, 20% stocks, and 20% alternative income sources. All in all, IYLD's mix of ETFs creates a juicy 6% yield that's paid monthly. Thanks for watching and I would appreciate a subscribe as it truly helps the channel, especially with all the editing and animation takes a lot of time to create.